There's been so much talk in the news about the real estate market, interest rates increasing, a potential recession coming our way, and the question is now a good time to buy or not? And the answer is yes and no. For some of you, it is an absolute horrible time to buy, and for others, there's a lot of opportunity. So in this video, I'm going to break down who should buy and who shouldn't. What's going on, guys? My name is Dimitri Giannitsos with eXp Realty. I'm a real estate agent here in the city of Toronto. I help people buy, sell, and invest. So if anybody's looking to get in touch with me, they can go to the links in the description and book a call with myself. But with that being said, let's get right into the video. Realtors are famous for saying, hey, it's a great time to buy, always. And we're able to manipulate the data to show you the opportunity that's out there. But the truth is, it's not always a good time to buy, or at least for everybody. And especially when we're seeing a difficult market like we've seen over the last 8 months, you need to be able to understand what's going on out there, who are the winners and who are the losers. So starting off with anybody who should not get into the market right now, I'm talking about anybody who would be stretching themselves to get into a property right now. You're looking at those monthly numbers and you can barely afford to get in with where things are at right now. I would suggest that you hold off or go for a smaller property that gives you a little bit more flexibility. We don't know what's coming down the pipeline, and the Bank of Canada is still fighting inflation. So that means that we could potentially see more interest rate hikes coming, which could affect affordability. And if you're barely able to afford the property right now, I would not suggest getting into it. I would always leave a little bit of a buffer as a worst case scenario. If you're not sure what those monthly numbers look like, or if you can afford a property, this is where I would suggest go to a mortgage specialist. If you don't have one, reach out to me. I can connect you with someone great, and they're going to break down your finances and show you what you can afford and what you can't. And then from there, you can make the decision on whether it is the right time to make a move for you or not. Now, the next person who should not be getting into the market right now is someone with maybe inconsistent income, or maybe someone who doesn't have the most secure job. As we potentially head into a recession here, it's really important to look at the economic factors and how that could affect your employment. At the end of the day, we have a mortgage to pay, we've got bills to pay, and we want to make sure that we can hang on to that property. With the way things are going right now, if you fall into one of those two categories, I would say hold off your plans. It's a little too risky for you. So either take that time to save up more money, or potentially look at a smaller property. And keep in mind too that your first property, especially in an expensive market like Toronto, may not be your forever home or even your primary residence. I've had lots of clients who buy their first property and they rent it out as they continue to rent wherever they live, and they use that as a stepping stone property to climb up the ladder and eventually get into that dream home. Okay, now let's get into who should be buying a home in this market. And I'm going to say that first-time home buyers should be taking advantage of the opportunity, but I'm going to put a big caveat beside that because there's some important things that they definitely need to understand. Owning a home in Toronto right now is more expensive than it's been for a very long time. Over the last 8 months, we've seen interest rates increase, therefore increasing the cost of borrowing money, and your monthly payments are going to be higher than they were before. That being said, it's definitely advantageous to get into the market at a lower purchase price than it is a lower interest rate, because the interest rates are always changing. So that's why we always say, you date the rate, you marry the house. For those of you who do get in when prices are low, assuming prices go back to where they were at their peak, within the next few years, you're walking into anywhere from 15 to 25% equity, depending on which asset class you buy, which is a huge opportunity for you to climb that real estate ladder much faster than you would otherwise. But all that means nothing if you can't afford the monthly payments. So the biggest thing I would stress to any first-time home buyer right now is to go speak to your mortgage specialist, crunch your numbers, understand your budgeting, and really focus on, can we make these monthly numbers work? And also leave some buffer room should interest rates go up a little bit more before they go back down and stabilize. The second type of person who can take advantage of this market are the move-up buyers. So anybody who owns a condo and is looking to move up into a larger semi-detached or detached home. Condos right now are down anywhere from 10 to 15%, while semis and detaches are down anywhere from 20 to 25%. So just by selling your condo and moving into a larger home, you can actually pick up 10 to 15% on the market right now. And that's on top of the fact that you actually get to move into a bigger house. Obviously, there's a bunch of variables that go into this, and I would highly stress that you go speak with your mortgage representative, as some people are locked in on rates. Now, if you're locked in at a lower rate, talk to your mortgage specialist about potentially porting your mortgage, where they can actually keep your locked in rate and move it from your condo to another house. I've seen people do that in the past. And if you're up for renewal and you're going to have to lock in at these higher rates anyways, now could be a really good opportunity to make that move. The third type of person that should be looking to make a purchase in this market is, you guessed it, the investors. This is what you've all been waiting for. You've saved up your down payment and you're looking to take advantage of some opportunities, and they are coming. All those interest rate hikes over the last 8 months are likely going to start showing up in the market soon. And a lot of people are going to be getting notices saying, hey, get caught up on your payments or else we're going to force you to sell your home. And a lot of people are going to have that moment where they realize that they may lose their ability to choose what their home sells for. So they're either going to get caught up on their payments or they're going to sell it before the bank does. And for all the investors out there, now is the time to start licking your chops, looking for really good opportunities in the market. And for those of you who are saying, I'm going to wait for the real estate market to bottom out before I buy, I'm here to tell you that nobody knows when the bottom is. It could be right now. It could be 6 months from now. But I can promise you this, by the time you realize that it's the best time to buy, everyone else does as well. And right now we are seeing extremely low inventory. And as soon as people get the green light, that inventory is going to disappear, and all the new listings moving forward could potentially see multiple offers now that people have confidence to go out and invest. So really just dialing in on the property, understanding that, it may go down, another 5 or 10% before it goes back up. But this is where it's really important to understand time in the market versus timing the market. And this is why I always tell my clients to have a backup plan of hanging on to the property for a minimum of 5 years, whether it's an investment property or a primary residence, because this will give you enough time to buffer out the market fluctuations. At this point, you should have made enough money on the property that you can climb the ladder, you can take your equity and move on without taking a loss. If we find ourselves in a position after 2 or 3 years where we've made a healthy profit and you want to make a move, then great. But like I said, always plan for a worst case scenario, 5 years minimum. I hope that helps give you guys some insight as to who should put their plans off for the next year or two and who should really take advantage of this opportunity. Let me know in the comment section below what you guys think. Of course, as always, like the video, subscribe to the channel, and we'll see you guys on the next one.